an ADU on it. And there again, you can figure out the price. Like the wave is moving more towards modular housing, because it's more efficient. They can do it in 3 months. I was looking at possibly building some apartments in Redmond as well. One of the guys brought me some deals there, and I was asking my neighbor about, hey, can you do a 40 unit apartment building and do it modular so they can build it. They can build a lot of things in the factory in like 3 months, and they come on with a crane and put everything together. And so you could do the ADU. It's much less expensive.
Yeah, in fact, the lot, I have a half an acre, so I could actually put 3 more units on here.
Yeah,
But we're not hooked up to city sewer yet. It's down the street, and who knows when it's going to get here, and we're on a fairly failing septic. So I have to wait probably till the city sewer comes out here for that. But yeah, I would like to keep this place to do exactly what you're saying, Bob, is to have
yeah.
but in the meantime, I thought if I moved to another place, then I could rent this out, and it would be, and then I would, be able to keep this as a rental and then have the new place that would be, renters would be paying off, hopefully. So then I would have one investment besides my own house in Bend. So that was my plan. Plus, I just love real estate, and I'm always interested in doing whatever, like right now I'm really been putting my energy into figuring out being being an LP in syndications or some funds. And I'm getting ready to kind of do that by the end of the year. I'm just narrowing it down to 3 or 4 that I'm going to invest in. So
Let's have lunch.
I would love to. That would be
I,
great. Yeah.
I've also lost money in other people's deals, so I can give you a lot of insight into some things you got to look out for. Because I am invested in other people's deals that have struggled, you
Yeah.
know. So and some have come out really well. So it's that's definitely a whole different game.
Yes, yeah, and there's a huge learning curve, and I've joined some investor groups, and I'm basically right now my criteria is I will only invest in people who other investors who are experienced have invested and recommend, because I don't trust myself for the vetting process until I
Yeah.
do a few more deals. So yeah. So anyway, that's what I'm.
Gail just joined us. Gail, we're introducing ourselves and what you got going on, and what you're hoping to get out of this meeting. If you want to turn on. Hi. Are you there, Gail? Okay. Well, I think it's exciting that you guys are all here today, and I think Bob, I'll just let you handle this meeting for me. We've talked about that before, haven't we? It's been so long since we've actually had a good conversation on the Bend Area Invest meeting night. So this is great. I mean, seriously, like last month, there was just one person there. It was my insurance agent. So we just talked that stuff. So, and so glad to have you. Holly, you live in Redmond, Bob's in Bend, Carol's in Bend, Brian's on the south side of the state. In Klamath Falls, and I of course am in Eugene, and Gail is in Corvallis, I believe. And I want to say in the previous meetings when we did have people showing up for the Bend Area Invest, and Carol, this might be something you might want to think about, is that I had somebody who is a salesperson for a manufactured home company, and in the last time she showed up, because the business just boomed so much during COVID that she could no longer get off time from work, but they were months behind in providing manufactured homes. Like there's a huge waiting list. So I would like, if you're interested in that, is get to that kind of, I'll get you the information who that was, but there's like 3 big companies in the state that are providing manufactured homes, and this one, she was really on the ball. But since it takes so long, you might find out what the down payment is, and then and maybe a year from now, when it's finally ready for you, you've got your sewer. Something like that. So I'm just saying, just like everything else that's going on these days, the supply chain is slow. And in a new manufactured home, it takes every bit of supply that there is to make a manufactured home. And the demand is super high and the supply is low. So
Yeah,
um,
hey Grace, that's actually what's going on our lots. And the thing is, those are the people that I've been calling already. And it very interesting thing is talking to different dealers. All have different time frames, so you don't get the same answer. If they're selling Fleetwood, some people tell you it's 11 months waiting. Another guy said it's 6 months. So some of these dealers have enough room on their lots. What they're doing is they know that they're going to sell them, and they're always pre-ordering ahead of time. So their downtime may be a lot shorter. So it is an interesting game, and the supply chain thing is a big issue for them. So, you know,
yeah.
when I first met with the guy in Woodburn, he told me Palm Harbor was 6 months out. And now he tells me they're a year and a half out.
See,
Right.
that's exactly what I expect. Is what they're going to say is to get you hooked on the line is at 6 months, and then by the once you're signed up, then they're going to tell you the real truth a little at a time. You know,
Yeah.
1 month is 9 months, and the next month is 12 months, and the next month is 18 months or something like that. But yeah, they're way pushed back. Um,
But some of these places, like the first guy I met with, I've met with him a couple times over there in Woodburn. He does 30 to 35 deals a month, and he's always got stuff in stock. He's always ordering ahead of time, knowing it's going to go. So not a lot, but he's always got three or four that he's just ordered on his own. So it definitely, and this is part of my job starting next week is to start calling all of these dealers between Southern Oregon, up and down the valley, Boise, Vancouver. I'm calling all of them to say, hey, if you got anybody you can put in, we're going to start leasing now, knowing that no one's going to be putting on site for 6 months,
right.
right? And we're going to be done in 6 months.
Yeah, so what
So,
you're looking at is purchasing 59 units, 59 M8 manufactured homes, and putting them on the lot and then selling or leasing them.
we're not putting them on. We're just going to the dealers, letting them do the sales. They
Uh,
make they make the money, but they now have a space to provide a nice place to put it,
yeah.
and that's what they've all said. Hey, we've got nowhere to put these people. There's no room anywhere.
Hey,
So,
so Bob, will you tell everybody here about manufactured home lots, parks, MHPs, and the different grades that they are, and what grade yours is going to be? While I just was in a really long meeting, so I need to run to the restroom. So if you would tell people that, I need to take a break.
oh, okay.
Thank
Well, yeah. Before I started this project, I actually I met my partner the prior January, right when COVID started. We met at a networking meeting that I actually set up right before we met Grace's partner Daryl. Um, and so we talked about it for a while because he said he wanted to do. He's a mobile home builder, but I had never done a development, but I'm a syndicator, so I'm the money guy, and I have no problem raising money from investors for good deals. And so we ended up joining forces and putting this deal together. And so I've had to learn. I actually lived in a mobile home park when I was young at the beach, though. It wasn't the same thing as everywhere else. I was a beach bum. But I understand mobile homes. And the interesting thing is driving around 40 different mobile home parks from all through Madras, Terrebonne, Culver, Metolius, Redmond, and Bend. I went through 40 parks to see what was out there, and most of them, I don't think there's been a new park built in more than 15 years. And so the grades, as she said, were probably an A minus B plus. The benefit is we're in a lot of these places are in they're old single wides. There's no they're dirt roads, gravel roads, I should say. The mobile homes just have what do you call it, like an awning that goes over for parking. There's no amenities. It's really really basic living. Um, there was a nice one that had gravel road that's at Smith Rock that I never even knew was there. If you go back to the back parking lot and hang a right in the back there, the site itself is phenomenal. They sell for a lot more money than most of them only because of the location, but there's really nothing else there. Like the roads are still gravel. There's not really many amenities, but it's interesting to see the variations everywhere. Um, so yeah, so they are graded from basically an A to a D, and most of them are fairly poor, you know. So it's some of them have good amenities. There's a really some of them are senior homes, senior living, like Cascade Village in Bend is up on the north side off Cooley Road. It's a very nice park, well groomed, well taken care of. The rents are expensive. The homes are expensive as well. I mean, the new homes they're putting in there on some of the extra lots that they had are selling for over 200,000, and I think the rent is something like $895 a month. But it's a senior park. So yeah, it's a wide range. We're going to charge 625, which is more than the other properties um, in Madras. But again, they're getting a single car garage. They're getting a double driveway if they have a boat and a little RV. I mean, they're going to save. I checked $60 a month in Madras to park those things in a storage facility. So, cost effectively wise, they're in a really nice neighborhood because we are surrounded by single family lots. So it is an interesting game, the mobile home parks. Not for everybody. It's mostly what I've seen in most of Central Oregon is it's bottom of the barrel affordable living in most of them, not all of them.
I've been flipping some single wides recently and they suck, I have to say, to flip a single wide. And because first of all, they're old. They're not manufactured homes, they're mobile homes. So you have 59 units or lots. How big of acreage is it?
It's a 7 acre parcel, and
7 acres. So that's a nice amount per house.
yeah, these are going to be for double wides and or triple wides.
Yeah.
So this is a nice park.
And I think everybody on this call is aware of the big lake that Billy Chinook is right there by Madras, and yeah, having boat parking for them is key as well, probably. Yeah,
Yeah.
in your rivers and all that. So that's awesome. And so yours, I missed it. Is it going to be an A? Would you consider it an A?
I think he plugged it maybe as an A minus or a
Okay.
B plus. I can't remember. You know.
Concrete curves, curbing and streets and
We have to put in one of the streets, the main streets, we outside, because we're right on the fringe of town. Um,
okay.
and then they're going to do the driveways inside, and then what comes when someone buys the manufactured house, they also pay what's called a park pack fee, and that's going to include the garage, the driveway, the fencing. So there's a fee that's associated that comes with that as well.
Would anybody else on this call tonight like to see his plans for the park that you submitted? I know I'm curious to see it. Like, what did you submit to Madras City Council or planner or
Yeah,
whatever?
I actually have a map that I'm now was going to start on Monday.
Oh,
Start giving to all of the dealers so that we can maybe once a month it's updated saying this one's rented, this one's rented.
yeah.
The goal is to take a deposit, sign a lease, and tell them they're going to start paying rent regardless April 1st. So we should be done by then.
as far as park rules, are you gonna have this as being a 55 and older? Are you gonna make it so people can rent sublease it? You know what I'm saying? So if I bought one, I live here in Eugene, I could rent it to somebody else up there.
That's a good, it's not a 55 and older. I don't know about the rental. I'll have to talk to my partner about that.
Okay.
He he's built parks and owns parks in Central Oregon. So I'll defer that one to him. I think renting them isn't always a good idea. Because you've got all owners in there that all know each other, and there's a safety factor because we are going to be screening tenants and doing background checks. So I think we lose a little bit of control, and maybe the neighbors won't like it if they're being rented. So I will discuss that with them, but I got a feeling that, um, maybe there's a gray area, maybe outside of family. How do you monitor who's coming in there? So.
Okay, that's interesting.
Are you guys doing your own water treatment and sewer, or are you gonna be, is the city gonna do that?
We are paying, we have to put in 10th Street. We have to pay for the sewer to go in.
You'll be on
All
city.
all of these things are going to be individually metered for uh, electricity and water. I think, as my partner said, most of these are built without gas. And so we may not need any gas in the park. So,
The thing, and I know very little about mobile home park development, but from what I have read about it, it's like the water treatment was a big issue about if they did it themselves, it's very complicated, or sometimes it was hard to get from the city, but it sounds like it would just be like a regular subdivision.
yeah, it is. We are part of the city. We're in the city, and it is city water.
Okay,
Yeah.
that will be easier, yeah.
Yeah, way, way easier. So,
Hey, Bob, I got a question for you.
okay.
When you're looking at doing a development like what you have going on here, where do you find your break even where you actually start becoming profitable with, I mean, you're spending a couple million on this, correct?
We are. I think our total cost going in is about 3.35 million. The
Hmm.
appraisal we got done is listed at about 6.4 million when it's fully functional. When you syndicate, it's even a little bit more complicated because I had to raise 1,185,000 from investors to do the deal. The bank we just closed today actually. The bank funded the loan yesterday and we recorded today. So they put up the rest of the money. So we're paying bank interest, and we're also paying investors money. So essentially, you're doing 100% financing in a way that you have to make sure you're cash flowing enough to pay the bank and pay the investors, and that there's money still on the table. So this is where you learn over time. You have to know your costs and expenses, and how much can you pay out. No one wants to lose money. So it's a different game. But that's the same thing as what a REIT is. If you invest in a REIT in the stock market, they're doing the same thing. Hey, we're buying buildings, uh, and it makes X amount of cash flow, and you're typically getting paid somewhere between 6 and 7% on an average REIT. They're cash flowing based on the buildings they're buying.
So what I'm hearing you say is that you are borrowing more, bringing in more investor income than is actually needed for the park so that you can make these payments while it's getting set up and developed and all that stuff. So is that right?
Well, part of that's right. If I had 1,185,000 myself, I could do it and get a bank loan and do it by myself.
Yeah.
The idea is that you're utilizing capital to your greatest advantage. And so a syndication is raising money from investors and paying them a return on their money to come into the deal. And so yeah, you have to pay the bank, but you have to make sure that there's going to be enough income down the road to make sure you can pay everybody. So it's just, it is essentially 100% financing if you want to look at it that way.
I'm sorry to be trite here for a second, but it just reminds me of playing cash flow and borrowing more than I need by a lot so that I can invest and make those payments every time I go around the board or every dice roll or whatever kind of thing. So um, I think it's awesome what you're doing and appreciate it. Holly, I'm wanting to hear from you.
What would you like to hear from me?
So you want to get into some flipping or short-term, sorry, you have a couple of short-term rentals, but
I do.
you just resigned as a nurse
Yes.
and now you're a real estate investor full-time. Is that right?
Well, I'm also a real estate agent. I've
Oh,
had my,
oh, great.
yeah, I've got lots of hats to wear. And my husband and I have a wood shop. So we're really
Wood
busy
shop?
people. Yep. Yeah, we build custom furniture. So that's something he's walked away from his full-time job. He just recently had shoulder replacement surgery. And so he's healing from that, and we're just going all in to not have to worry about a paycheck anymore, or a W-2 anymore, I guess I should say.
Yeah, so tell us, so since you're a realtor, I don't think anybody else is that's on the call here up in that area. How's that going for you? And what's the,
Yeah, it's not bad. Having to work full-time jobs and then try to juggle real estate was a little challenging. But I still did pretty well. I just got a listing today for a commercial building in Bend. So that's pretty good. But I think I'm more geared towards the investing part of it and the wholesaling part of it than I actually am, dealing with buying and selling personal or residential areas.
so what is your area that you're wholesaling?
Just barely getting started. My daughter's in Vancouver, and she and I are working on right now on some retired landlord leads. So trying to work in Vancouver area right now.
It's a good one. Yeah.
I'm interested in the Southeast. I have family in Alabama and Tennessee, so I really would like to start focusing down that way as well. Just kind of want to get a network of different people to learn as much as I possibly can, and people who'd like to invest and partner with me in this journey. So I've got a lot to learn.
I'm guessing that the opportunities are more flush in the Southeast of the United States than they are in the Northwest.
Yes, definitely.
But that being said, like the after repair value is much higher up here. So the per project, the bang is a little bit, the paycheck's probably higher too as well.
Sure.
Yeah. So in let's see, Tuesday night we had marketing mastermind, and Dan Gandy was totally recommending people try to reach out to other parts of the state for your marketing, for wholesaling, especially because you don't have to actually be present and wholesale in other property areas. In my experience was in this year, I had a property that I wholesaled in Pendleton. I never saw it.
Oh.
I made $15,000 on it. Never,
Nice.
yeah. It was just pure paperwork kind of thing. So sold.
That's what I'm looking for.
Yeah.
That is the model I'm looking for.
Yeah, there you go. And so it doesn't matter where you're at, whether it's Redmond or Bend or Eugene or Klamath Falls or Corvallis or whatever, just like those are the hot areas, except for Klamath. I'm not sure. I'm gonna have to ask Brian about that and how hot Klamath Falls is, because I circled it on my map is to start marketing down there. And yeah, so, and we do a lot of, there's quite a few members that do wholesaling and are learning wholesaling and working together and that kind of stuff too. Pretty cool. Brian, so tell us about Klamath Falls area. How hot is it there?
It's ridiculous. I should have bought up more property back in 2015 and 2016 because it's tripled in price over here. And the waiting list to find a rental is ridiculous. Nobody's really building. And it's just there's these people that are coming from other parts of the big cities and different states that want to get out to a rural area, and it's everything's going for top dollar plus above appraisal. So I'm done here. I got this duplex I'll remodel. It'll take me out into spring to finish both sides, and then I have a single family that I'm going to do, and then I'm moving to another state. Yeah, and we'll see what happens there. But I've been looking back in Alabama for the past year, kind of watching the market and so forth. And you're right. The homes, they don't increase as fast as they do here on the West Coast, it seems like. And I'm sure any state along any coast probably increases fairly fast. But anyways, my concern on something like that is if you were to buy a cheaper property inland in the Midwest or whatever, the rents aren't that, they're not that high. So they're kind of, the ratio there's kind of balanced. But 10 years down the road, the property doesn't seem like it's really increased a huge amount, where 10 years down the road over here in Oregon or Washington or California or whatever.
I'm sorry, go ahead.
Yeah, it's just gone, bonkers. So I understand we have cycles and whatnot, but yeah, so I'm really curious about that because I even looked in Tennessee for a little bit, and I've just kind of been watching the market, networking with other investors in the areas that I like, kind of see what everybody's up against, because the thought of taking and going over to a cheaper area where you can pick up a home for 50,000 or 60,000 or below 100 even, where here you get the same home, it's costing you 250 minimum.
Right.
And the rent margin isn't, over here, a $250,000 home, let's call it like 1,300 square foot, going for, I don't know, anywhere between 1,500 to 2,000 a month, depending on the area. So it's, it seems very desirable to go into the Midwest, but like I said, I have some real concerns about how the homes appreciate.
So I just sold a house in Kansas that I lived in for 13 years, and I sold it for 10,000 less than I bought it for.
Oh my gosh.
Right. I sold my house for $55,000
Oh my
on 2 acres, 2,000 square foot house.
Oh, that's
the Midwest,
not appreciation.
Right.
Oh my gosh.
Kansas is a beautiful flyover state. That's the way it needs to stay.
Where in Kansas was that, Holly?
I was in Lyons. It's right in the middle. It's about 90 miles north of Wichita.
Oh my gosh. Wow.
Yeah, nothing but farm community, but no, there's no growth there. They the railroads all shut down there. That was their biggest for years and years and decades. That was their pull, and there's nothing there. Yeah, no, just keep flying.
Oh,
Looks
well,
like
Brian, you got your ear to the railroad. You got your ear.
I do. Great thing about you brought up Kansas is I'm going there here in November. I'll be between Lawrence and Bonner's, Springs.
Well, that's actually got some value to it up there by Kansas City.
College town, yeah.
Yeah.
I've actually been over there the past couple of years off and on, and I've whenever I get to a new area, that's the first thing I do is I start pulling up listings. I start pulling up rental advertisings. I'll even networks with some realtors and just kind of feel the place out, but I don't know. I like what Bob's doing, but that's a lot of money and a lot of networking. And so that's kind of concerns me too, because, I have zero experience in that. So I'm just kind of plugging away a little bit here, a little bit there. I'm slowly growing, and I just don't want to make any mistakes where it sets me back,
Right.
I've got a a recommendation. I do all the networking I've done, and because I'm involved in these syndications, I'm also on Zoom calls with like big sponsors, right? And there's a guy named Neil Bawa who owns a company called Gracopius, and he does Zoom calls and talks about his. He's an Indian guy. He's a data driven guy, and there's things he teaches you if you look up city-data.com, and there's 5 things in there that he analyzes and has these Zoom calls and explains how to do them to go, which markets do I go into? And there's 5 things about where's the job growth, how much percentage is it increasing, right? Like Phoenix, Mesa, Arizona is considered #1 in the country. Dallas is, I think, #2. Job growth, decreasing crime rates, appreciation rates, growth rates, and you find all this stuff in city-data, but he explains what you're looking for and what percentages, because it's always like a old data from say 2019, but you have to do like a 4-year growth, and I mean it's interesting to. This is the kind of stuff that you want to research to go, where am I going to go? You know, where do I put my money? That because as you get older and you learn, as Carol is, hey, I want to retire. What's the most important thing to an investor? Capital preservation. Okay.
Yeah.
Capital preservation. You invest in somebody, if you make a 2% return, that's what it is. But as long as you don't lose capital, that's your biggest asset that you want to keep, work, if it doesn't work, you put it somewhere else later, right? But diversification in places where you're not putting all your eggs in one basket, right? So you've got some research to do. Go, if I go into Alabama, are there some good markets there that, the theory is out of sight, out of mind. I've heard that from a lot of people. If you're going to move there, you can invest in Alabama because you're there. Just put it in the right sub market. You know, don't do the out of sight, out of mind thing because you've got no control. You don't know what your manager's doing. You don't know what your tenants are doing. You don't want to pay the money to fly there and look at it. So.
But Bob, you have properties all over the United States and they're out of sight. How do you keep them in mind?
A lot of the stuff. So my brother lives in Minneapolis, which is a really good market, and we have a 35,000 square foot warehouse. I moved that property from an industrial property we had in Texas that kind of turned into a disaster at the end in Fort Worth. Really good market, below market rents, and we thought everything would be fine. And the tenant went belly up. And but we did a 1031 exchange and moved it up to Minnesota and got a great deal up there. So my brother now is, he can go look at it. It's a 10-minute drive. I have an industrial property in Charlotte that I've never seen, and I'm not too worried because the market's so good. It's just a single tenant deal, but and it's a newer building, 2009. So I don't really have any problems. Most of the other stuff I have is investing in other people's syndications, and it is spread all over the place. So I don't really have to worry about it. I have faith in the sponsors on the deals, but that was my belief in doing my diversification.
No, I just recently joined something called Left Fielders, the Left Field Investment Group. And they're not selling anything. It's not a monetized group. It's just people like me, but most of them have a lot more experience, and to help each other in terms of investing. And they help vet sponsors. And so that's an area that I've been super helpful to be able to get to know other people that are ahead of me, and learning from other people's mistakes. And maybe at least for me, that's a helpful thing, Brian, is like being able to not just like wing it totally on my own, being in other people's deals, people that have more experience.
Would you all, Carol and Bob, put into the chat some sort of information for you, left field, Carol, for Bob, Neil, Bahwa, you don't know. There's a million ways to spell that. So like maybe he's got some YouTube out there or something like that. We could check it out and link in. Just put that in chat, and then we could hopefully check him out.
Oh, you want me to put the data hyphen?
Yeah, so data-citydata.com. I'm aware of that, but Neil, who talks about it, that would be interesting too. And you know, maybe he's a mastermind. Yeah,
Did that go? Oh,
I want to know how to spell Neil Bawa.
are you familiar with him, Neil
Never,
Bauer?
never heard of him. So I had to pretend I knew how to write it down.
I I do love teaching, so I'm putting in here
Nice,
my info.
nice.
Yeah, when I was an in-house lender, I taught the finance class for years, sitting in the one of the KW offices, and it's like,
Nice.
I take pride in helping people, and I had a mentor as well that helped me. He's one of my partners on a couple of the deals, but he taught me a lot of things, and I try to do the same thing. It's giving, playing it forward, right?
Yep. Carol, do you have the
Yeah, I'm typing. I'm on my iPad, so it's slow. I don't have.
oh, that's right. You were on a phone when you were, that's right. Sorry.
Yeah, so I'm typing in here in the.
Yeah, you have to do voice text.
Yes. And I'll, if anybody wants to keep these, I'll send them out to an email to you. So,
And that'd be great. Grace, what are you doing?
oh, so what I'm up to right now is filling out a lot of loan applications to, I have a fourplex. You probably know that. I have a fourplex that I bought in 2012 for 235,000. Those same duplexes are now going for 450, and I'm thinking I want another, even though, if you look at it, in 9 years time, it's gone 235 to 450. There is this thing called tired landlords and Carol mentioned it, with the landlord laws, kind of stuff like that. I'm not afraid of them. I have developed partners to help subsidize the rent and that kind of stuff in Eugene. And so I want another fourplex. So I've been filling out loan applications to get pre-approved when I find one. And then somebody here would also, I think, was it Holly, is sending out letters to landlords.
Yes.
Yeah. So that's going to be my next thing here. And I have also been sending out letters to we call it the hidden market. You drive around driving for dollars and you see the dilapidated houses or whatever, and that need to be rehabbed. And so I'm sending out letters and then calling them as well, and that kind of stuff, trying to get more. So I have a single wide that I'm flipping, should be done this month. And then I also have another house that I bought and was planning on flipping, but the tenant wants to buy it. So hopefully that will close within the next couple of weeks, where the tenant buys it, and I'll just make 20,000, but it's like I didn't have to keep smelling the cigarette smell in there anymore. It was really bad. I mean, tasting it really. So, yeah. I had a conversation with a mortgage lender, and then I brought him to the main meeting last week, and learned something interesting, which is that FHA has a cap of their loans, which is like 370,000 or 350,000 or something like that. And he says, have you noticed that all single family houses, whether it's 800 square feet to 1,500 square feet, 2 bedrooms, 1 bath to 3 bedrooms, 2 baths are all selling for the same price of 360,000 or 50,000 or something like that. I'm like, yeah, it's like, so the ARV is like up there, no matter what size it is. And he says that's because FHA's cap is right there, and it's due to be reassessed in November. Probably will go up again for the area. So for our area, the FHA lending is right there. And so I'm also talking to lenders about jumbo loans, commercial loans, and that kind of stuff. So I like how you partner, Bob, with somebody probably who has money. It sounds like maybe that's who your partner is. I don't know. Not saying that you don't, but you like to use other people's money, which is a good thing. Yeah.
I have a big investor base because I've done this for so long that they're always asking me, "Have you got a deal? Where can I put my money?"
Yeah.
So,
And how did you start that? How did thinking way back some decades, how did you start getting investors?
um, 1995. I was looking for a deal, and uh, I, I I didn't have any more money after I bought my first apartment in '94, and I was like, man, the market was so low. I could see the inherent value. Like you couldn't build these things. The market was upside down in '94, and so I started looking into the syndication. I didn't even know what it meant, but I got a couple of my buddies together, and we formed our own company, and then bought our first building and 12 unit building in Culver City for 500 grand. And the seller, we only had to put 10% down. Seller carried the note. And so I raised 50% from one of the guys I went to UCLA with. And we put up the other money. And that was my, 8 of the units were empty. But because I was young and way back, I used to paint at my dad's apartment. So I had a painting business when I was 16. And so I said, I'm not going to let this fail. And I went in and did all of the units myself and made sure we weren't spending money before we had any money. And as soon as that deal closed and it was up and running, within a year, once you own a property, all the brokers are calling you. The commercial market works totally different. If you own property, all the commercial brokers are maintaining their own client base and they all want a double end deal. So you never see a lot of the deals. That's the one thing you realize commercially. You will never see the best deals because they don't advertise them. They go to their client base, and immediately they found me because I was the contact listed, and a guy called me for another building up the street, and it was a 12 unit double lot that had fallen out of escrow twice, listed for 425, but it was a major rehab deal. And we ended up same thing. We got a seller carry, and my creative financing was, hey, we want to do the deal. Will the seller carry the paper, 20% down, and hey, we're going to put 20,000 in escrow to fix up to start fixing up, and we got it to work, so we didn't have to put a bunch of money in, and that just it kept rolling from there. So we started with one investor, and that deal we went to a couple more investors, and then it started to grow from there. So
I think the key thing for everybody on this call to remember is when you see something for sale, try to find out if the seller will carry. If the seller will carry, because I know one of the members of Oregon RIA just bought a commercial retail mall, or strip, 9 units, and the seller carrying it, all of it, not part but the whole thing. So
yeah,
yeah,
the
yeah.
bank. It took me 3 months to close today, and I've been more than irritated with the bank.
Yes.
So it's really been a grind. I haven't been happy. So I'm glad we got started finally.
Well, congratulations. Any final questions, thoughts, or anything before we sign off, anybody? And thank you, everybody who's contributed. It's been great. You guys are awesome.
Yeah, anybody, I'm open. I left my number on there if anybody wants to call me. Next week's probably better, but I'm happy to educate and fill in and do what I can and offer whatever knowledge I have and pass it along. So
Well, that sounds good. Thank you.
Yeah, thank you. I'd love to. I'll take you up on that. And Holly, I was wondering, well, like with you, you could put up your business, you're a realtor, what your business number is, or if you want.
Yeah, absolutely.
Okay.
Good idea.
And what your last name is.
Well, I had it set up before that it showed it. I don't know why it's not now. All of my settings got changed somehow. You've been off the Zoom meetings for 2 months and everything changes.
Yeah. Who knows?
Hey, while that's going on, I got some information. I went to a rental owners meeting last night, and they went over HUD housing and fair
Mm.
and for 2022. I don't know if you want to write the numbers down, but I thought this was quite interesting. I'm not really interested in doing HUD, but I don't, you don't have that as a choice because you can't discriminate, correct?
Right.
So, so basically, I leave it up to my property manager, and they, the person has to qualify per what their standards are. So, but this, what's interesting is for 2022, 1 bedroom is $693 a month is what they're saying fair market rent is. A
Okay.
2 bedroom,
Where's that?
912
In
Oh.
which market?
in Clown Falls.
Oh, okay.
3 bedroom is $1295, and a 4 bedroom is $1552.
I missed the 2 bedroom.
Yeah, me too.
12.
I still didn't hear it.
Oh, 912.
912, okay.
So it's probably higher here and there.
So what I find interesting is I have a single family home, 3 bedroom, just a standard basic home, 1,250 square feet, 2-car garage. Nothing. In fact, the driveway is gravel. It's not even hard surface, and it's not even a fenced in backyard. In not the greatest area. I want to say probably a C minus right in there, neighborhood, and I pull 1,800 a month off that home.
Oh.
3 bedroom, okay. And my property manager, I asked her how the tenant was doing because I noticed the tenant's been paying multiple payments on the first day with credit cards. So I said, "Is there a concern there?" And she says, "No, but if she moves out, I'll give over 2,000 for that property." I was like, "Really? Well, let's get her out." Okay, so then on my duplex, I have one tenant in there right now that's paying 600. I've given her a 90-day notice. I actually offered her 3 months rent, $1,800 if she could get out within 30 days, because there's a safety issue there that I need to address, which I feel is more important than leaving someone there. So since I'm pulling it out, or basically making these are vacant, one side's vacant, so I'm currently remodeling. Once she's out, then I'll remodel that side, bring everything up to current. And my property manager said by that time, they'll be able to get at least 1,100 a side. They're about 100 square feet, and they're 2 bedroom, 1 bath, single car garage. Again, gravel driveways. I mean, it's not that fancy. And that one's in kind of like a C+ neighborhood. So I thought the HUD numbers seemed awful low.
My 2 bedrooms I'm renting for 800, and I'm looking at turning them into Section 8. So now I'm looking at like, okay, so maybe I should be raising my rents. Yeah.
Well, yes, definitely, because for 2021, a 2 bedroom is $858 according to
Yeah.
HUD, and it's on their website. You should be able to go in there and find this and
Okay.
punch area. So to give you an idea.
You got 1,800 coming in on the one, but you can raise the rent 7% plus the 2% cost of living. That's $190, right? What?
Right. And I leave that up to my property manager. We've already talked about it. This tenant will be in there for a year come mid-December. And I asked what their plan was, and she said that she was going to address it, and they probably were going to raise it. But to be honest with you, that home, I was figuring 1,500 before they got to 18. And so I was just ecstatic that they got another 300 a month, and it rented it in like 5 days. I mean, it took no time. And so, anyways, if they raise the rent, then that's the business we're in. I mean, I am affordable housing, but I'm also in it as an investment, looking for a return. I'm not looking for peanuts. I'm looking for a return that is profitable. So, if I was going to trade dollars, I'd go do something else.
And don't forget, tenant turnover is your most expensive cost of owning the property. So even if they raise the rent, maybe they don't have to raise it the whole amount.
You're
But
right.
you don't want to lose the tenant. If you got a paying tenant in there, it's better than having your other problem and having a non-paying tenant. So
Right. Right. And you're exactly right there. And I'm sure you guys got the same problem over there. The market, people can't find housing. They can't find housing, and I don't understand why they don't try to buy. Some of these people can definitely qualify to buy these homes. But anyways, so that's why the rents are going up to ridiculous amounts, is because, well, one, the cost of the home's going up, but also the demand's there. You can get the higher rent.
the United States is short 4 million housing units per Freddie Mac. So we got a big problem. So
Yeah.
that's why the biggest investment, all the big sponsors are buying multifamily, because they know that they can go in and they're all looking at the value adds where they can come in and upgrade a little bit of these units and raise the rents by 100 to 200 bucks a month by doing some interior upgrades, and that people are paying. I mean, these are some of the deals I'm invested in. I'm seeing it in South Bend, Indiana, and Kansas City, and uh, Arizona, all over the place. So I mean, these are big projects I'm in, and
Wow.
it's amazing to see there's nowhere for people to go. You know, so that's why that's the demand. We're short. That's why everybody's passing all these ADU laws. But
Okay.
they said it's going to take 10 years to catch up, and you've got the 29 to 33 year olds who are ready to explode out of their houses and finding places, so they're exacerbating the problem. So this should theoretically keep going, even though people are talking about it at some point a downturn. But we don't have a mortgage crisis. We don't have overbuilding, but you have potentially corporate debt problems from anybody paying attention to China. Evergrande and Fantasia now it's defaulted, and three more companies have defaulted. And are we going to have a supply chain problem? There's 100 ships lined up at LA Harbor in Long Beach. They can't even get the stuff off the ship. So we got all kinds of problems ahead of us. You know, everything's getting more expensive.
Where'd
Yeah,
you
you're exactly
where'd
right.
you get that stat that US is short 4 million housing units?
What's that?
Where'd you get the statistic that the US is short 4
I have
million?
I have that in an email I saved.
Oh yeah, did you say it was a federal government or something or?
I think that was a Freddie Mac.
Okay,
I've heard that same statistics. I can't remember the exact details, but 4 point something million, and it was going to take, that we're going to be years and years until we can catch up. I heard 5 to 10 as well.
wow.
Yeah, I mean, the contrary is the mortgage moratorium just ended. In the next 90 days, are we going to see all these houses come back on the market? But the inventory is 50% of normal 6-month inventory, and it's only going to bring it back to normalize it. And a lot of these places, there's so much equity, there's not going to be short pays, so there's a lot of unknowns coming, but, what time will tell.
I like it. I really like tonight's meeting. I appreciate everybody. And Bob, and Carol and Holly, sometime I'll get up there and have coffee with you guys, or maybe we'll
Sounds
have
great.
things
Hey,
around pizza or something instead.
Yeah, hey, Grace, I got 2 kids at U of O that just started this year.
Oh, you do?
I will be over there quite often for family functions, so I should call you when I'm over
Yeah,
there.
let me know when you're coming. Yeah, that'd be
I-
awesome.
Are you in
At the
Eugene?
end of the month.
I'm in Eugene.
Because I'm going to Eugene on Thursday, and then again, I'm meeting a friend there. We're going to the coast, so I'm going to be in Eugene next week.
Sounds good.
So maybe I can see you either way on the.
Yeah.
But there would be Thursday or on the way back Sunday night or Monday.
Well, we could
I'll
shoot for
text you.
Thursday or Monday. That'd be great.
Okay, that'd be great. It would
Yeah.
good to see you in
I would
person.
love to meet you in person too. I have no idea how tall you are.
Not very. I'm much taller on Zoom.
Funny. All right. Thank you, everybody. I'll send out these if you probably all wrote them down, the numbers and everything. Holly,
I
thanks
did,
for
thank
putting your
you.
phone number in
Yes,
there and
thank you.
everything. And yeah, Brian, thanks. And hey, Brian, are you ever in Southern Colorado on your Union Pacific travels?
Oh yeah. We were supposed to go Colorado earlier this year, but that got changed. My schedule's bouncing around, but I'll be, like I said, I'll be between Lawrence and I think it's called Bonner Springs.
In Kansas.
And, yeah, for a month, basically the month of November, and then December we go down to Mojave, California, somewhere in there. So,
Okay.
but I do go to Colorado. I love to travel, so and I get paid to do it. So
Good thing.
yeah.
Well, good night, everybody. Thanks so much.
Thanks a
for
lot. It was
doing
nice meeting you
anyways.
guys.
Thank
Yeah,
you.
it's really good
Thank
meeting you
Yeah,
all.
nice meeting you. Brian, don't be afraid to call me.
I won't. I'll when I got some time, I'll catch up with you. Give me a little bit here, though.
Yeah, next week's good.
Okay, sounds good. Thank you, buddy.
Well, thanks,
Bye,
y'all.
guys.
Bye,
All right, see
guys.
you.
See ya.